Hello and welcome back to a new video. In today's video, we're going to discuss remortgaging when you're self-employed. So what is remortgaging? Remortgaging happens when you replace one loan with another that's secured to a property. You'll normally do this when your existing product expires at the end of a product term. So how does remortgaging differ to a standard purchase mortgage? With a remortgage, you already own the property that's being refinanced. With a purchase mortgage, you're arranging a mortgage for a property that you're looking to buy. So can you remortgage when you're self-employed? The answer is yes, as long as your income is sufficient. When you're employed, it's quite different to being self-employed. For employed applicants, you just need payslips or a signed employment contract as proof of income. When you're self-employed, you normally need at least 2 years of tax calculation and tax year overview documents before you can proceed with a mortgage application. These documents are generated when you submit a tax return to HMRC. Now, most lenders, they'll need to see at least, as I say, 2 years of these tax calculation documents to accept them as income. But how they tend to look at tax calculation information is if your profit declared on that document has increased in the latest year compared to the last. Some lenders can use that most recent figure, but most will still average the two. Now, if you've had declining income from your self-employment, they'll take that declined figure shown in your latest years of books. So what are the different types of self-employment and how does that impact you getting a remortgage? The most common types of self-employment are sole traders, partnership owners, or limited company owners. Now, if you're a sole trader, you're technically the same entity as your business. So lenders will look at your personal tax calculations and tax year overviews, and it will say on their profit from self-employment. It's normally the figure after expenses and before tax that lenders use for affordability. As I say, on the tax calculation document, it will show as profit from self-employment. That's the figure that you should use. For a partnership, it's very much the same. You're also treated as the same entity as your business, but it's a little bit different for limited company owners. If you own more than 25% of a limited company, lenders will class you as self-employed. Now, limited company owners, they take dividends and they also take salary. Now, lenders will normally still treat this in the same way as a normal self-employed applicant. They'll need to see your latest 2 years of tax calculation and tax year overview documents to accept that as income. But if you own a company, lenders may be able to use your net profit sitting in the company towards your affordability. This can be really handy and it can boost how much you can borrow without needing to take it as personal income. And this can be very beneficial for tax purposes. So what happens if you've only just started self-employment? Sadly, across the whole mortgage market, you'll need at least 1 year of self-employed books before you can apply for a mortgage. And to be honest, there are very few lenders that can accept just 1 year of documents. You have to imagine for a mortgage lender, it's quite a big risk to take on an applicant that's only just started a business because most do fail within the first couple of years. That's why most lenders insist on at least 2 years of tax calculations and tax year overviews before they consider an application from you. So here's a few extra tips for people who are self-employed who are looking to get a remortgage. So the first tip is to manage your credit file as a self-employed applicant. When you're self-employed, especially if you run a sole trader or partnership business, you're technically the same legal entity as your business. Now, a lot of self-employed applicants, they get a bit muddled with their credit file, and often liabilities that they thought would be in their business name actually show on their personal credit file. So just keep track of your credit file and make sure you don't have any accidental late payments on there. And the next tip is to get your paperwork ready prior to doing your mortgage application as a self-employed applicant. If you were employed, it's far easier. You could get payslips from your employer and bank statements and things very quickly. When you're self-employed, it is a bit different. You need to get tax calculations and tax year overviews. You need to get business bank statements. It can take a little bit of time to gather this documentation. So get it well in advance of your mortgage application and really consider bringing in an accountant to help you. Thank you for watching today's video. If you enjoyed, read the rest of the blog below. And if you're looking for self-employed mortgage advice, inquire with us at Boone Brokers. We're whole of market, fee-free, directly authorised brokers, and our brokers are dealing with self-employed applicants every day from all over the UK. So send us an inquiry.